How is everybody doing today? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. This is the weekly banking update where you give me 30 minutes of your time and I try to bring you all the latest and greatest banking news from the week that was. So, as I always usually like to start with, we're going to get into some economic indicators, and I just want to give everybody what's coming up this week. We'll get into some of the stuff that came out during the week, but I want to give everybody what's coming up this week. So on Monday, August 5th, we get the service PMI, we get the ISM manufacturing PMI, and we get the FOMC member Mary Daly is going to speak. Oh, sorry. That's best way. Mary Daly is going to speak. On Tuesday, we get trade balance, we get API weekly crude oil stock. On Wednesday, we get consumer credit. On Thursday, we get initial jobless claims, followed by the Atlanta Fed Now GDP. And then on Friday, August 9th, we get the U.S. Baker Hughes oil rig count. So little light on the economic data this week, a little bit of unemployment information coming out. But obviously the Atlanta Fed GDP, I think that is probably what everybody will be having an eye on Thursday to see what that looks like and how that comes out. Now, the two biggest stories of the week were the FOMC meeting. I'm going to read some stuff here from that in a second, but basically the gist was that rates remain unchanged and that they are getting closer to having a rate cut. And the other big thing was the jobs report, which came out on Friday and basically rocked the market and just really sent ripples through. Now, I'm not going to get super in depth on the jobs report because I actually just did a separate video on that, which came out yesterday. So I did, and that episode is titled The July 24 Jobs Report. Oh my. So if you really want the kind of in-depth scoop and analysis on what happened on Friday with the jobs report, please go check out that episode. But let's get into the FOMC minutes right here for the minutes. So on July 31st, Wednesday, as expected, the FOMC did not change its benchmark rate range from 5.25 to 5.5% for the eighth consecutive meeting. According to the statement, upside risks to inflation have decreased as the labor market has softened, and it noted that careful monitoring will be necessary for the potential lag of impact from policy in the labor market. So in other words, the potential effect of interest rates ultimately on the labor market. And obviously, when they talk about 5.25 to 5.5%, they're referring to the federal funds rate. And again, federal funds target rate kept at that range. Markets react. The S&P 500 ticked up. U.S. Treasuries remain largely unchanged following the announcement. The market is still pricing a 95% chance of a 25 basis point rate cut at the September 2024 FOMC meeting. Now, I do not believe they meet in August. I believe they're off for August, so that's why there's such emphasis on the September meeting. Because they'll come back basically at the end of September, and then they'll, like I said, probably most likely do the rate cut then. The FOMC announced the following actions and analysis. Unanimous policy vote. The Fed nodded to a softening job market, but stated job gains have moderated, and the jobless rate has moved up but remain low. The Fed is now attentive to risks on both sides of the mandate, low inflation and low employment, compared to the previous statement of being highly attentive to inflation risks. The Fed repeats they're still waiting for greater confidence on inflation before any rate cuts. The Fed cut the Treasury runoff cap to $25 billion from $60 billion. So that is the Fed's balance sheet. So basically they were running off $60 billion. Now they're going to bring it back to $25 billion. And then let's see here. And then this is just the Federal Reserve. This is from the official press release. So recent indicators suggest that economic activity has continued to expand at a solid pace. Job gains have moderated and the unemployment rate has moved up but remains low. Inflation has eased over the past year but remains somewhat elevated. In recent months, there has been some further progress toward the committee's 2% inflation objective. The committee seeks to achieve maximum unemployment and inflation at a rate of 2% over the long run. The committee judges that the risks to achieving its employment and inflation goals continue to move into better balance. The economic outlook is uncertain, and the committee is attentive to the risks to both sides of its dual mandate. In support of its goals, the committee decided to maintain the target range for the federal funds rate at 5.14% to 5.5%. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. The committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence and inflation is moving sustainably toward 2%. In addition, the committee will continue reducing its holdings of Treasury securities and agency debt and agency mortgage-backed securities. The committee is strongly committed to returning inflation to its 2% objective. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. The committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. The committee's assessments will take into account a wide range of information, including readings on labor market conditions, inflation pressures and inflation expectations, and financial and international developments. So there you have it. Lot to digest there. I think the Fed is basically hedging their bet. I think they're basically saying that, okay, we are concerned about this labor market right now. We are concerned about the jobs and where they're going. And obviously that bared out in the jobs report, which came out on Friday and which absolutely, like I said, rocked the stock market and sent not only ripple waves through our market, but through the global economy as global stock markets around the world were down pretty good on Friday. We'll see how things kind of bounce back this week after that news has been digested. But I think the Fed, especially in that last comment, the last sentence or two there, they really seem to be hedging their bet. The committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goal. In other words, what they're saying there is if we have a black swan event or if something really, something out of the expected happens, we want to give ourselves room to maneuver, dramatically reducing rates. The committee's assessment will take into account a wide range of information. Again, basically saying that, hey, we're going to look at all kinds of information before we, make our decision. Now, I am very mixed on this. I am very mixed on a rate cut because I still, even though the Fed is saying that hey, the risks of inflation have been dramatically reduced, and yes, that is true, but I don't think that they have been reduced enough that we could start legitimately cutting rates yet. And I still have a greater fear of inflation than I do of a bad labor market. Because if you have a bad labor market and then the Fed starts reducing rates and then the inflation takes back off again, then it's going to be a million times worse because then they're going to have to dramatically increase the rates, which is going to make the labor market even worse. And is going to mess the economy up even worse than it is now. And so again, I mean, I am very, very cautious on here. I mean, I would basically say that, hey, look, if the labor market goes into the toilet for a couple of years, then kind of, so be it, until you absolutely know that inflation has been tamed. And again, here's the other thing. The inflation, there's two other things that you have to think about too. When the Fed drops the rates, they're going to permanently lock in all the inflation that has already taken place over the last few years. So all those price increases, yeah, they're then become locked in. Okay, so you have to think about that. The other thing is that I lost my train of thought there on that. The other thing with the just with the inflation in general is the government. It's the government spending. If the government is not going to reduce spending, if they're not going to get the spending under control, inflation cannot be fully under control because the government is what is creating the inflation. So that being said, okay. All right, let's get into some news here. So the Federal Reserve Board terminated the May 2023 enforcement action issued with closed California-based Silvergate Bank and its parent company, Silvergate Capital Corp. The action ensured the bank would liquidate and wind down while protecting depositors. If anybody's been following my coverage of the crypto market, the crypto series, they'll understand that Silvergate Bank played a very key role in the failure of the other banks, which occurred last year. Go check out my other episodes if you want to learn more about that, or check out the crypto episodes, crypto series. Cuba is prohibiting local businesses from using U.S. bank accounts to keep dollars inside the island country amid its worst economic crisis since the Soviet Union's collapse, Bloomberg News reported. The businesses were told to make all payments to international suppliers through local banks, the report said. More than $94 billion of U.S. commercial real estate is currently distressed, with $201 billion more expected to add to that, signaling that the pain from the U.S. office downturn may just be beginning, Bloomberg News reported. Further declines in appraised valuations and price indexes are anticipated in the near term, making loan extension even more difficult to rationalize. The report quoted a note from Pacific Investment Management Company analysts. So definitely need to keep a big eye on that one. Westco Bank Inc. expects to be on the brink of crossing a major regulatory threshold when it completes the acquisition of Premier Financial Corp. The acquisition would bump the bank's pro forma commercial real estate to risk-based capital ratio up to 299%, just below the recommended regulatory guideline of 300%, according to a company filing. On an investor conference call, executives said they were aware of that ratio and the concentration is affecting loan pipeline decisions. In other words, they can't get new loans done because they're afraid of going over that ratio. So, and just for anybody who doesn't know, banks have what's called, as it relates to commercial real estate, they have what's called the 100 and 300 ratios. And it relates to basically a concentration of commercial real estate in your portfolio. And when you get to that 300 ratio, not that the regulators are going to hammer you or going to beat you up about it, but they frown upon it. It is very frowned upon, and they basically start to get worried that you've got, too much commercial real estate concentration in your overall bank portfolio, and they can, gently, kind of say, hey, you need to kind of bring this down a little bit, gently. Okay. Most bank executives want the U.S. Congress and law enforcement to make check fraud a bigger priority in light of its proliferation. American Banker reported, citing a survey published by FinTech Intrify. Bank executives said check fraud undermines faith in the banking system and the U.S. Postal Service, as 90% of bankers said they experienced an increase in check fraud over the past 2 to 3 years, according to the report. Yes, that is absolutely true. Bank fraud is a major, major problem in banks right now. It has really exploded in the last couple of years, and I will probably talk more about that in another episode. I'll get to that in a little bit. So, Origins Bancorp said a certain questioned activity by a former banker in the company's East Texas market reduced its second quarter earnings per share by 25 cents and negatively impacted net interest margin, though it believes that an ultimate loss arising from the situation will not be material to its financial position. So yes, the questioned activity by a certain lender at this bank, basically, I don't know a ton about it, but I know a little bit about it. Basically, this lender was doing some fraudulent stuff. They had to write off a bunch of loans because of it, and basically led to this second quarter earnings report. So, Customers Bancorp, new hires include the hiring of 10 teams from New York Community Bank in April, have brought in $900 million in new deposits since the first quarter of 2023, executives said during a second quarter earnings call. That's very nicely done. The U.S. Securities and Exchange Commission charged activist short seller Andrew Left and his firm Citron Capital LLC for an alleged $20 million fraud scheme using bait and switch tactics to mislead investors. And I could be wrong, but I believe that this was the guy that was accusing Roaring Kitty of fraud. So again, if you haven't seen I did a whole movie review of the Dumb Money, the GameStop saga, which was an awesome movie, by the way. If you haven't seen it, definitely go check that out. But Roaring Kitty kind of came back, and I think I don't know if he's gotten officially charged with securities frauds, but I think he's being investigated at this point. And probably bring you some more updates as we hear more about that. So Morgan Stanley said it already deployed its second generative artificial intelligence application dubbed AI at Morgan Stanley Debrief to financial advisors last week, favoring homegrown solutions over out-of-the-box tooling from technology providers, the Wall Street Journal reported. It's Morgan Stanley's second collaboration with OpenAI. So, well, I think I had reported last week that JP Morgan had rolled out its own AI and basically has installed that in just about every one of its business lines, business platforms across the country, across the company. And now we're seeing that Morgan Stanley is basically rolling out their own AI version. So Vanguard Group warned investors that U.S. regulators might limit the size of stakes the asset manager could hold in companies, potentially bumping costs and risks for some of the world's largest index tracking funds, the Financial Times reported. Yes, they should limit what Vanguard can do because, as I reported before, I am not a fan of how big Vanguard, BlackRock, State Street, I'm not a fan of how big these companies are, how much power these companies yield. And as I've said before, and I will continue to say, I think all three of them should be broken up. Cantor Fitzgerald said it plans to launch a Bitcoin financing business to give leverage to investors who own cryptocurrency. The company is earmarking $2 billion in initial financing for the new venture, according to a press release. Whitehall, Ohio-based Heartland Bancorp agreed to merge into Jasper, Indiana-based German-American Bancorp. The all-stock transaction is expected to close in the first quarter of 2025, and the aggregate transaction value is expected to be roughly $330 million. The combined organization will have more than $8.1 billion in assets and a branch network of almost 95 rural, suburban, and urban locations across southern Indiana, central and northern Kentucky, and central and southwest Ohio. U.S. District Judge Trina Thompson in San Francisco ruled that Wells Fargo & Company must face a lawsuit for allegedly defrauding shareholders about its commitment to hiring diversity. Reuters reported Thompson had reportedly dismissed a version of the lawsuit in August 2023, which accused the bank of conducting fake job interviews of non-white and female applicants with no plans to hire them. Very interesting. Okay, more Wells Fargo news. So Wells Fargo & Company is under probe by government authorities on issues related to the company's anti-money laundering and sanctions programs. Wells Fargo disclosed in a regulatory filing, it did not say which government or agency was doing the probe or the issues being investigated. In the same filing, Wells Fargo said it is in talks with the U.S. Securities and Exchange Commission to settle the agency's probe into the bank's cash sweep options for investment advisory clients at account openings. Now, everyone will remember I've reported on some of the issues with TD Bank, with obviously their anti-money laundering and BSA, the major issues that they've had over there. So it looks like the regulators are checking out some of the other banks and perhaps not liking some of the things that they're seeing at Wells Fargo right now. Morgan Stanley is offering to sell to investors bonds tied to a portfolio of private loans worth over $4 billion, an effort to transfer significant risk. Bloomberg News reported, citing people familiar with the matter. The talks are in the preliminary stages and details could still change, the report said, citing the unnamed sources. The move, on which a spokesperson for Morgan Stanley declined to comment, follows a similar offering by Goldman Sachs Group Inc., tied to about $2 billion of subscription lines, the report said. And now, keep in mind here with this, that I had been reporting over the last few months that a number of the larger banks were selling off loans. They were trying to de-risk themselves by dumping a bunch of loans. And I wondered if they were doing that because they were worried that a lot of these were commercial loans and they were worried that, they were going to take a hit on these loans. So it's like, okay, well, we'll sell them off to, other private equity, hedge funds, other Morgan Stanley, Goldman Sachs. And now it looks like Morgan Stanley and Goldman Sachs are getting a little antsy about it. And they want to now unload this off to, they want to offload this to investors. So, as the worm continues to turn, as they say. The Federal Deposit Insurance Corp leadership did not carry out an effective sexual harassment prevention program that would allow the reporting of alleged sexual harassment misconduct and address allegations of such misconduct promptly and effectively, the agency's Office of Inspector General disclosed in a follow-up report to a 2020 evaluation on preventing and addressing sexual harassment. Okay, some Economic news. So construction spending dropped in June. Construction spending fell 0.3% in June, but was up 6.2% from year ago, the Commerce Department reported. Private construction was 0.3% below May, and public construction fell 0.4%. Manufacturing dipped in July. Economic activity in the manufacturing sector contracted in July for the fourth consecutive month, according to the Institute for Supply Management. ISM's manufacturing index registered 46.8% in July, down 1.7% from the previous month. This is not a good thing, and this is a big red flag. This dip in manufacturing is not good, and it's 4 months in a row, and that trend is starting to look a little bleak there. Okay. A group of Senate banking Republicans led by Senator Thom Tillis urged the Federal Deposit Insurance Corp to withdraw its proposed corporate governance rule, arguing that the rule will increase the regulatory burden on banks in small and rural communities. Lacks consensus among the FDIC leadership and is actively opposed by state supervisors, American Banker reported. Republican lawmakers, led by Chairman of the House Financial Services Committee, Patrick McHenry, wrote Fed Chair Jeremy Powell a letter urging the central bank to withdraw and repropose the Basel III Endgame rule in its entirety and submit any new change through a new notice of proposed rulemaking. So, like I said before, due to the election, I don't think that we're going to see anything happen with this Basel III Endgame. I think that basically this is all going to get pushed out into probably next year. So, okay. Now I want to talk a little bit about the Fed. So the Fed, or I'm sorry, not the Fed, the FDIC. FDIC was very, very busy this week. They had a whole bunch of stuff going on. So the FDIC should provide more transparency as to how it assesses industrial bank applications instead of leaving applicants waiting in a prolonged review, agency board members said. One of the reasons some of these applications sit for so long is because they cannot get approved, but we do not necessarily deny them in a timely fashion, said Rohit Kapra, an FDIC board director and the director of the Consumer Financial Protection Bureau, said in an FDIC board meeting on July 30th. FDIC board approved the proposed revision of its regulations on broker deposits to strengthen the safety and soundness of the banking system in light of large bank failures in 2023. The FDIC is seeking public comments and information on unreported deposits, including uninsured deposits. The agency seeks more granular information on the composition and characteristics of uninsured deposits that directly contributed to large bank failures in 2023. And finally, the FDIC board approved a final joint guidance with the Federal Reserve that seeks to enhance resolution planning at large banks. The agency said the final guidance is largely similar to the proposed guidance from August 2023 and incorporates some changes in response to comments they received. Okay, and then let me just, there was one thing I was looking for on broker deposits. Yes, I just want, so this is the FDIC's proposed new role on broker deposits. During an ambitious board meeting on Tuesday, the FDIC issued a proposed rule to revise regulations on broker deposits following the recent failure of the non-bank deposit broker Synapse Financial. So, citing the impact the FDIC broker deposit framework adopted in 2020, the agency said the rule would simplify the definition of deposit broker, eliminate the exclusive deposit placement arrangement exemption, revise rules on the primary purpose exception or PPE, and require regulators to consider the third party's intent in placing customer funds at a particular depository institution. So public comments on the proposed rule are due 60 days after publication in the Federal Register. And so the FDIC in 2020 approved a new framework for determining whether deposits made through deposit arrangements qualify as brokered deposits. So a lot more to come on that. Let's see what else we got here. Got a couple more minutes here before we wrap up. So we got the GAO, Government Accountability Office, said scams are a significant and growing problem for U.S. individuals and businesses, noting that scams involving fake investment opportunities rose from $3.31 billion in 2022 to $4.57 billion in 2023. FinCEN issues notice to bank customers on beneficial ownership requirements. FinCEN issued a notice to customers of financial institutions about reporting beneficial ownership information. The Corporate Transparency Act requires certain entities, including many small businesses, to report to FinCEN information about the individuals who ultimately own or control them. There is legislation. I have reported on this. If you don't know, go see my episode on BOI, which is beneficial ownership information. I will be doing another episode on this in the next week or two, just kind of bringing some updated information on that. And then also, just keep a note. If your company if you have a company that was created prior to this year, you don't have to report until January 1st of 2025, until January of next year. If you started a company this year, you have to, I believe you have 30 days, 60 days to report it to FinCEN. So if you started a company this year, you have to go in and report. You have to do that. But I've been telling people that if you haven't done anything yet, just hold off. Just wait a couple more months. Let's see what happens. Let's see what happens with the legislation that's out there. See what happens with the election, because that will play a big part in this whole thing. And just see what rolls out. I'll keep everybody noted. If things are still, if nothing's really happening in December, I'll basically come back and probably say, hey, listen, everybody, you need to get out there and report, and go from there. So. Okay, the Conference of State Bank Supervisors announced that the first phase of its nationwide multi-state licensing system enhancement is complete. CSBS said it is solving many of the pain points that created challenges for users throughout the licensing and registration process. It published a podcast and video on the updates to its resources page. Personal income spending growth. So personal income increased 0.2% in June, and consumer spending rose 0.3%. The Commerce Department reported. The PCE Price Index, a key inflation gauge, increased 0.1% and is up 2.5% from a year ago. Consumer sentiment dipped in July. Consumer sentiment fell 1.8 index points in July, according to the University of Michigan Index. Year-ahead inflation expectations fell for the second consecutive month, reaching 2.9%. Home growth slows in May. Home prices increased 5.9% in May from the same time a year ago, following a 6.4% annual gain in April. The Federal Housing Finance Agency's index of U.S. home prices was up 5.7% in May from a year ago and unchanged from the previous month. The Consumer Confidence Index rose to 100.3 from a downwardly revised 97.8 in June on an approved short-term outlook. BNPL, buy now, pay later, digital users accounts need to comply with the billing error resolution process, and Regulation Z could provide community banks relief, the ICBA told the Consumer Financial Protection Bureau. So buy now, pay later products operate in a space where a consumer's main avenue of error resolution is through their community bank, and debit and credit card disputes and chargebacks are at record levels. So very interesting, more of that. Community banks seeing uptick in HELOC-related check fraud. So this is kind of interesting. So fraudsters are increasingly using information gained from public record searches on recorded mortgages to create checks drawn on home equity lines of credit, ICBA told community bankers. In a new message, ICBA President and CEO Rebecca Romero-Rainey said several ICBA members this week have reported an uptick in HELOC-related check fraud. So HELOC documents often contain all the information a fraudster needs to generate checks, including the customer's name, address, lender, signature, and account number. So definitely keep an eye out for that. Okay, so that's basically all I've got for this week. I had a lot more stuff to get to, but didn't quite, never quite have quite enough time in these 30-minute episodes. And I think that's why I want to venture into more of eventually into a live stream format every week, a weekly show where I can hopefully get everybody a little bit more information on all this great stuff that happens in the wonderful world of banking week in and week out. But I will tell everybody that I will kind of wrap up with these final comments. I posted a couple episodes this weekend. I did a documentary review for a Netflix documentary called How to Rob a Bank, which I thought was a great documentary, really interesting. I did a book review for a book called The War on Cash, looking at, considering, kind of civil liberty and how that plays into having physical money. Also, you know, talks about, you know, cashless society and things that are kind of coming down the pike, that kind of thing. So if you're interested in either of those things, go check those out. Like I said, I published a report yesterday on the jobs report from Friday for the July jobs unemployment report. So go on and check that out if you haven't watched that yet. And make sure to check out, I've published a lot of other videos on the channel here over the last couple of months. So go back and check that stuff out. I got all kinds of good stuff out there. Whatever kind of floats your boat. I try to hit a little bit of pop culture, try to hit on specific topics, try to hit on breaking news. So hopefully you will find a lot of this stuff good and entertaining. So, but if you like this episode, please make sure to like, share, and subscribe, as that always helps the channel out. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please make sure to leave any comments down below, as I always love getting back to everybody. Make sure to check out thebankernextdoor.com, and I will see everybody again next week. Thanks a lot.